Hey Bird Dog fam, it's Ellie, aka QBDG, Queen Bird Dog Guru from BDRE, Bird Dog Real Estate. And this is part 3 of the future of investing on Millionaire Monday. Okay? And so if you've been paying attention to the series of posts that have been coming from the Bird Dog Real Estate group and the Bird Dog Real Estate page, make sure you guys like the page and follow on Instagram at Bird Dog Real Estate. You'll see that we have been making several posts about the U.S. Department of the Treasury. Okay? And why have we been making posts about the U.S. Department of the Treasury? Recently, Executive Order 14067 has been signed, and in September the policies were published by the United States Department of the Treasury. So in sections 4 and 5 we have been dissecting and deep diving into exactly what these policies mean as far as our currency in the United States. Okay, and so the focus has been on digital currency. The executive order refers to this terminology as crypto assets. Okay, and so we have talked about how bird dogs can get involved, which also is in the NFTs and real estate ebook. You can check it out. How wholesalers can get involved, how flippers and real estate buyers can get involved. We're going to focus on how title attorneys, hedge funds, and hard and private money lenders can get involved, as they actually are the ones who are able to put certain policies into place. So I'll start off saying, if you are a bird dog, if you are a wholesaler, okay, you can, in this particular space, you can create a space within real estate investing of being someone's crypto asset manager. Okay, so similar to a hedge fund where they are asset managers in general, there are independent individuals in the real estate space who have no idea how cryptocurrency or blockchain technology works. So with you being newer into the field of real estate, you still have that time to be able to specialize in different areas and curate a specific niche in the real estate investing space, with you being new to the industry and this being so new as an innovation. Literally, this is innovating our actual currency and technology as a whole, as a country. And so I'm going to go ahead and go into exactly how everybody can get involved in this space, okay? And this post is on the Bird Dog Real Estate page. The full post is on our website in our cryptocurrency and blockchain investors group. Hedge funds and private and hard money lenders innovating crypto asset real estate. Private and hard money lenders, along with hedge funds, specialize in the specific area of finance. By niching the innovation of real estate investing on the blockchain, private and hard money lending providers and institutions provide solid framework for this financial evolution. Hedge funds may be more general in the financial space and can specialize in the real estate investing arena on the blockchain as well. Wholesalers who use lending for double close purposes, title attorneys, and real estate buyers and developers benefit greatly from partnering with private and hard money lenders who adapt to this financial innovation. Working together provides insight from all angles to provide ideal financing solutions on the blockchain. So I'll reiterate. Wholesalers who use lending for double close purposes, title attorneys, real estate buyers, and developers. Okay, these are the actual real estate professionals who can have a say in exactly what is happening when it comes to those who provide finances, those who provide lending services. They have a direct say in how this blockchain technology is developed and how it is utilized. So that is the beauty of blockchain technology when it comes to crypto assets. The money is the money, okay? The crypto is the crypto. The blockchain is the blockchain. The tokens are the tokens. The reason that the U.S. Department of the Treasury is requesting for, basically they're requesting for assistance and innovation. The reason they are is because this is such a free space. Everything's fra la la. It's very, very creative. And you can create specific digital coins and tokens that do very, very specific things. And so by us niching in the real estate investing space, whatever sector you're in, it creates a way for us to develop this technology and have it to where those of us, whether it's decentralized or centralized, we are able to utilize the technology properly and ethically without there being too many issues within the space. Because, you know, people already are using cryptocurrency to purchase property. However, with the developments and innovation into the general public, the government is basically asking for people to help develop the technology. So with individuals who are, like I said, wholesalers who use funding for double close, title attorneys who close at escrow, and for property buyers and developers who use funding for their projects and whatnot, those are the direct utilizers of the funding. So if it's done on the blockchain, they will have a say in exactly how the technology is used. Real estate crypto, private and hard money lending with blockchain technology. The United States Department of the Treasury has confirmed its involvement in blockchain technology. So I'm going to read an excerpt from the executive order in section 4. Money, payments, and the current payment system. Money. Money serves 3 core functions. First, money must serve as a unit of account, which means that it can be used to price goods and services. Second, money must serve as a medium of exchange and commerce to buy and sell goods and services. Third, money must serve as a store of value. That means the value of money is generally preserved over time. Money comes in 2 forms, public and private. Today, U.S. public money primarily consists of central bank money, which is a liability issued by the Federal Reserve. The general public uses money in the form of paper currency or Federal Reserve notes for everyday transactions. Banks and certain other institutions can access central bank reserve balances. Coin is also considered public money and is issued by the Treasury. There are $2.2 trillion in Federal Reserve notes and $3.3 trillion in reserve balances and $50 billion in coin outstanding. Private money includes commercial bank money, dollar-denominated balances, and commercial bank accounts. Certain other liabilities of non-banks, such as balances held with financial technology, otherwise known as fintech firms, other non-bank financial institutions, or other payments providers to effect transfers can also be viewed as private money. There is currently at least $19.4 trillion in private money in the United States. So like I said, you know, the main individuals who would be able to, I'll say push forward innovation in the most productive way would be private and hard money lenders and hedge funds. And the only reason I stress private money and hard money over hedge funds is because a hedge fund managers, they can manage all types of assets. And even though private and hard money lenders, they can lend on other things, we know here in the real estate space, we are specifically talking about for real estate property investment purposes, most of the time short term, okay? Because even when it comes to like landlords and stuff, even though there is private money out there for passive income, usually those types of investors would get a different type of funding, or like more traditional, like a mortgage or anything like that, or, you know, just something a little bit different from hard money because of the points that they have to pay on that hard money. They may use private money more than they would use hard money, but, you know, it would usually be more traditional financing versus private or hard money when it comes to long-term holding properties. But when it comes to flipping or double closing, or even in some cases, you know, project development, where you have real estate developers who are doing really, really big projects, like somebody who does, you know, private or hard money, they may utilize, I mean, they may lend to someone doing a really, really big project because it may be worth it more at the end, versus a rental property that's, less than $100,000, it just may not be mathematically worth it. So that's why I stress the wholesalers who use double close, and real estate buyers and developers. They are familiar with this private money sector in general. So they're basically in the executive order going over the uses of money. So here in real estate investing, we are familiar with the uses of money for how we utilize it. Intermediaries. There are two general architectures for CBDC intermediation. CBDC is central bank digital currency. One, a single tier direct, a single tiered CBDC with the central bank, and two, a two-tier CBDC where intermediaries, potentially banks or non-bank financial intermediaries, would onboard and manage payments while the central bank records account balances. While the central bank records account balances. Under each approach, an end-user CBDC holdings would represent a direct claim against the central bank. However, considerations for these general architectures may differ according to wholesale or retail CBDC. In a single-tier model for retail CBDC, the central bank would issue CBDC and interact directly with the public. The central bank would be responsible for all AML/CFT obligations, including transaction monitoring, filing suspicious activity reports, and customer due diligence. The AML/CFT obligations associated with holding these accounts would result in a government entity having access to customer due diligence and transaction information for all U.S. CBDC transactions, which would represent a significant expansion of the U.S. government's access to financial data, which should be carefully considered. This model would also raise novel challenges for AML/CFT supervision, as another supervisory body would need to monitor the central bank's own AML/CFT compliance. This model would have implications for credit creation, as discussed further in Section 4. Okay? And so, considering the statement here, it is discussing the actual creation and innovation of the currencies. So, again, I will stress decentralized currency simply because you can tell just by this, they're trying to get all up in everybody's business. It just is what it is. They're just trying to be all up in everybody's business. And on one end, it's like, yeah, we're trying to innovate this technology and make sure we're using it right. And, we want to collect as much data as possible to make this as easy as possible for everybody to be able to use properly. On the other end, y'all already know sometimes this type of stuff is malicious. So we have to study the basis of it, which started off decentralized, which is no government involvement. Okay? We have to know it from that basis. So even when we are innovating it for the centralized purposes, which it just means mainstream, it's mainstream and the data is accessible by the government. That's all that means. So we do the decentralized research and provide centralized data that can be utilized for the general public. You get what I'm saying? So that way, people who do utilize your services, let's say you go into, because you like this space now, let's say you go into private lending or hard money lending, right? And you utilize this information to, of course, build your own base of customers, and you are part of the pioneering act of providing data and information for the Federal Reserve to be able to implement these things properly, right? So you don't want to just give all your customers information away and it's not even, that's not what they're utilizing it for. They want to use the technology to make their investing either more discreet, or they want to utilize blockchain technology because that's the way that they like to use their money. Whatever reason they want to use blockchain technology and utilize your lending services, that's the reason they're using it. Now, if someone wants to be part of the experiment, you can, of course, let them know. Otherwise, The data that you collect should be provided to the Federal Reserve or whatever entities you're working with, as we'll discuss further. It should be provided in an anonymous way. And still, even when you turn in your report, you slice it, keep that information decentralized for your customers and provide centralized data. So it's like, okay, here's our data. This is what we have discovered. This is how we're utilizing it in our company. We're keeping our customers and our investors' information private and discreet, away from what y'all got going on. However, we like the fact that this is happening. We are innovating with you, and we will at the very least provide you this information, and you can become an intermediary within this space as well. The Federal Reserve is actually looking for individuals to help them with this. A more feasible model in the United States for intermediating a retail US CBDC would be a two-tiered system, which is in line with what the majority of jurisdictions globally are considering. Under this model, the Federal Reserve would issue and redeem US CBDC, but the distribution of US CBDC would be handled by intermediaries eligible for an account at the Federal Reserve, and payment services would be managed by intermediaries and other private sector participants, which is like what I was saying. This would be similar to how paper currency is distributed through commercial banks. It also shares similarities to responsibilities surrounding non-cash retail payments today. The intermediaries on board provide customer support and manage payments. In addition, intermediaries would likely implement AML/CFT obligations, while relevant supervisors would monitor compliance with those obligations. So I'm going to repeat that last sentence again. That last little part. While relevant supervisors would monitor compliance with those obligations. So all of this is what they're saying without saying it is we need help. I would just be straight up. What they're saying without saying it is we need help. And so, as we know, most people gain their wealth in general. They increase their net worth by investing in real estate. Whether that's purchasing a lot of properties and having that net worth based on the equity they have, or even going into wholesale real estate and being able to capitalize off of, being able to make large sums of cash within a short amount of time, and then eventually investing it in different ways, or even becoming a partner within certain entities in the real estate investing industry. It's just so many different ways to make money here. So many. So by those of us who know this information and who have these different connections, who have these different network individuals and, as vendors and different connections and whatnot, by being part of this pioneering act and innovation in crypto asset technology, the Federal Reserve is aware of that. They're aware of it. They need help. And so who better than the people who are actually within the space where most people get rich to actually assist in development of this technology. Okay. Joe Carrera says, too many ways. I'll need a VA, LOL. And that is real. It's real. That's how it is. Okay. Both banks and non-financial intermediaries could support a wholesale CBDC. I'm going to stop there for a second. Both banks and non-bank financial intermediaries could support a wholesale CBDC. So what is a non-bank financial intermediary? A hedge fund, a private or hard money lender. You're not exactly a bank, but you operate similar to how a bank works. Private equity firms, stuff like that. I didn't mention private equity specifically on our website. Me personally, I have not dealt too much into the private equity space, so I will not speak on that too much. I do know people who are, hedge fund managers. I do know people who are hard money or private money lenders. So I can speak on the information that I do know about this particular space versus something like private equity, which may work similarly. It could apply the same way. So if it does, you do your own research and see how it may apply. However, I will not speak on that too much. That is just something that, I'm thinking about when I read non-bank financial intermediary. It's an institution that operates in the finance space without being considered to be a bank. In a bank-based system, banks would provide all intermediation services. In a hybrid system, non-banks could also provide custodial or wallet services. So custodial or wallet services is literally monitoring what's going on in crypto asset wallets. And so by being a custodian of a crypto asset wallet, you will be able to, in some ways, have control, but in other ways, just monitor and make sure no weird stuff's going on. Because someone could be in the middle of a transaction and then you see something funny happen with the numbers. You're like, hold on, what's going on? And you're a custodian of that wallet. It's like, or the crypto key, a custodian of the crypto key. And you could either potentially put a stop to it, or you can address whoever is another custodian of the key and be like, what's going on? And be like, oh, okay, well, that's happening. Whereas, in a business, a regular business, you file a couple of paperwork sheets and, it's over. But if you're a custodian, certain things just can't happen on the blockchain without everyone's consent. That is why blockchain technology is so great. It's so precise. It is so precise. You can encrypt the codes for the coin, whether it's a token or a coin specifically, those keys, those crypto keys, you can encrypt it to make it to where it cannot be manipulated unless all thoughts are in unison. So it's really, really cool how that even works. That's why the intermediaries are so important, so that no one just has full control over anything and everyone has to be in full compliance before certain decisions are made. Banks could also provide a settlement layer that interacts directly with the central bank, and non-banks could provide an interface to other financial institutions for the holding or transfer of wholesale CBDC. In all cases, intermediaries would need to ensure availability of wholesale CBDC as well as a high degree of security and resilience. There could be institution holding limits on wholesale CBDC. A range of characteristics of the intermediary could determine holding limits, including the size of the intermediary, other business lines of the intermediary, supervisory concerns, or operational considerations. There could be more general factors such as the degree to which the US CBDC outstanding, that sentence just like runs on. But I'm gonna go back to this sentence. It's talking about a range of characteristics of the intermediary could determine holding limits, including the size of the intermediary, other business lines of the intermediary, supervisory concerns, and operational considerations. So that part is super cool, because that's letting you know it doesn't matter the size of your firm. It doesn't matter the size of your firm. It doesn't matter how many customers you have. As long as you have that technology and you're developing it in a righteous and ethical way, then you are able to provide the right types of services and provide the right types of data for this to work properly. And so it's talking about the business lines of the intermediary as well. So literally it's letting you know this is something that people who already have things going on are kind of juggling it, just adding this in here, because no one just expected there to be new money. People expected there to be more money. People didn't expect it to be new money and new technology of how we get this money. So with that being said, they're already aware that there's supervisory concerns and operational considerations. And of course, there's other business lines of what would be considered an intermediary. So, I just think that part is really cool, because it's like, in some ways it's considerate. However, it's just being realistic about the situation. Recommendation 3, establish a federal framework for payments regulation to protect users and the financial system while supporting responsible innovations in payments. The United States should promote responsible innovations in payments. Non-banks are increasingly providing payment services, including issuing money or money-like liabilities and processing payments. On one hand, participation by non-bank payments companies may contribute to higher levels of competition, inclusion, and innovation. On the other, if these firms are not adequately regulated and supervised, there may be risks to consumers, the financial system, and the broader economy. A federal framework for payments regulation would help to realize the benefits from non-bank payment providers while minimizing the risks. Accordingly, Treasury recommends consideration of the establishment of the federal framework for non-bank payment providers that will complement existing federal requirements, including for customer protection and AML/CFT. So that was really self-explanatory. Honestly, pretty self-explanatory. It's just saying basically, like, I'll start with this part right here. Competition, inclusion, and innovation. So we're talking about non-banks getting in on this new money stuff. So it's like, okay, everybody, let's run in, let's go get money. However, like they said, if these firms are not adequately regulated and supervised, there may be risk to consumers, the financial system, and broader economy. So why bring in wholesalers who use funding for double close? Why bring in title attorneys? Why bring in real estate buyers and developers? Why do that? Because these people are going to help ground the innovation that's happening. There is an actual basis for these crypto assets and this particular blockchain technology. Okay? Everyone working together, it creates a healthy ecosystem versus someone who's just money hungry and trying to find ways to snatch as much money from people as possible. That doesn't work. In order for a system to work properly, there has to be an agreement amongst the general public. So, reiterating, we're talking about hedge funds, we're talking about private hard money lenders, potentially private equity, if that, would be considered to be in the same category. Okay, who do you work with? Who do you serve? Make your product as useful and applicable to your consumer as possible. Make it as good as possible for the people who are using it the most. The title attorney may not use the funding. However, they have to do plenty of transactions with it. And of course, they get their fees. So how can you make it as easy as possible on them? That's what we got to think about when we're really pioneering and innovating what's going on in the economy as a whole. We're just in the real estate space, so we're going to be able to influence what's going on in the rest of the economy. A federal framework for payments regulation could support responsible innovation in payments by establishing appropriate federal oversight of non-bank companies that are involved in the issuance, custody, or transfer of money or money-like assets. Today, non-bank payment providers are subject to some federal requirements, but are otherwise regulated and supervised at a state level. State oversight of non-bank payment providers vary significantly and is generally not designed to address run risk, payments risk, or other operational risks in a consistent or comprehensive manner. A federal framework for payments regulation would provide a common floor for minimum financial resource requirements and other standards that may exist currently at the state level, and thus build on existing state frameworks. In considering and developing a federal framework, policymakers would consider existing state and federal standards, the nature and risks of payment activities, and developments in payments. Such a framework would also complement existing federal AML/CFT obligations and consumer protection requirements that apply to non-bank payment providers. So again, it's really stressing the fact that non-banks really should get involved with this. And that really just goes to show you, like, they're not pushing. Okay. Okay. Gratitude, MJ. So, is this being targeted to Bank of America? What's it called? Chase Bank. Is this being targeted to, Pinnacle? Not really, because the emphasis on non-banks and non-traditional financial institutions is very, very high. They're depending on private equity firms, just for example, they are depending on those who provide lending. They are depending on those who are independent to be able to innovate this technology. There's only so many, like fintech is its own space, and so they may focus specifically on just crypto, and it doesn't necessarily apply to other parts of our economy. So it's like you got the crypto space and NFTs and all of that stuff where it's just like it's all digital, it's all metaverse type stuff. Whereas here in real estate, we can apply it, it's this actual finance. We can apply it to a third dimensional actual asset, an actual product. Not to say that NFTs aren't a product. It's just more ideal. It's just more like art. It's more of an idea versus being an actual tangible product. Whereas everyone lives in a property. Everyone works at a property. Everyone goes to a property for some sort of service. So by us being able to tie it into regular everyday life, is really needed in order for this innovation to work within the system. Because otherwise it's just this floating magic money idea that isn't a real thing. Whereas you as a private money lender or a hard money lender, you're actually getting this digital money and providing it for somebody else to purchase a property. Or the way that you lend the money is done on the blockchain. So all the fees and processing involved is done on the blockchain in this floaty money space. But at the end of the day, the money is put towards an actual property. It's put towards something that's tangible. In addition, a federal framework for payments regulation could support considerations for both a U.S. CBDC and instant payments. As discussed above, a U.S. CBDC system may rely on intermediaries for a wide range of services, including payment services, custody, and distribution. A federal framework for payments regulation will provide a clear basis for oversight of such firms. In addition, an appropriate federal framework for payments regulation could provide a pathway for allowing non-bank providers to participate directly in instant payment systems. See recommendation 2. So I don't have recommendation 2 directly in here. That is in the executive order of section 4. You can read it. And so it's on the website. So I'm going to read this sentence again, because this is what I'm, letting you guys know, like, that without putting the question mark, being like, hey, can you help us? This is what they're saying. As discussed above, a U.S. CBDC system may rely on intermediaries for a wide range of services, including payment services, custody, and distribution. A federal framework for payments regulation would provide a clear basis for oversight of such firms. They need us. And so let's say you're a bird dog watching this and you're like, oh, I'm not a hard money lender, I'm not a private money lender, but I still want to get involved. Okay, that is where the idea of becoming a crypto asset manager comes into play. Okay, because that is not you being the investor, that is not you being the person who owns the asset, who is making the transaction, who has the money that is being lended and used for funding. You just know what's up. You know about the new system. You know how blockchain technology works. You have been studying. You know different individuals who are already in different projects like these. You may own some crypto yourself. Because, you know, that's the whole misconception. It's like you have to be a super rich person to be into crypto. It's like, that's not true. In order to be in crypto, you just have to know how the technology works so that you can use it on whatever level. Because, of course, everybody wants to own a Bitcoin. Right now, it's worth like, it's fluctuating like $17,000. And at one point, it was like $60-something thousand. Of course, everybody wants to own a big, expensive Bitcoin. That's not realistic. That's not realistic. Because it's more realistic to own a $60,000 house than to own a $60,000 Bitcoin. Just think about that for a moment. It's more realistic to own a $60,000 house than to own a $60,000 Bitcoin. It's even more realistic to have $60,000 worth of stocks or put away into a savings or retirement account than it is to have a $60,000 Bitcoin. At least in this day and age. Because even now, you know, you do have $60,000 NFTs. How realistic is it? Be real. How realistic is that? When we're not even talking about stable coins. Bitcoin is more of a stable coin than all these, you know, NFTs and other coins and whatnot. Like, these tokens they're based off of popularity value. Okay, when you're talking about stable coins, you're not going to get into big crazy numbers like that. Even though it's a secure investment. Usually secure investments offer lower returns. They're just secure. So it's not something you have to think about too much. Whereas if you're crypto trading, you got to see what's the most popular one today, what's the most popular one tomorrow, and see what's fluctuating. The volatility is crazy. Okay, so the misconception that you have to have a whole bunch of money in order to be a crypto asset manager, that just goes out the window. You can have a good, you know, really any amount into crypto. All you have to know is how the technology works in order to be an asset to someone else and to help them manage what's going on. It's all numbers and percentage. So if you have a low number, a few dollars, a few $100s in crypto, okay, you expand that into what's going on in the real estate space on the blockchain. So your few dollars worth of knowledge on the blockchain would be considered extremely valuable for, look, let's just be real, you know, it could be $1 million property that's being worked on the blockchain. Don't let numbers psych you out. It's just numbers. It's really just numbers, honestly. And so that is how you could be involved in situations like these. So we could talk about, you know, a little bit like governance tokens. Okay, so that is an area where people who are creating a particular system on the blockchain, they have a council of individuals who they consult in order to be like, okay, what do you guys like about the technology? What ideas for innovation do you have? How should we operate in these systems? What should we do for our customers in this way? That in itself, the governance tokens, the council for the blockchain technology, that should be the focus for whether you're a bird dog getting into being a crypto asset manager or a wholesaler who uses funding for double close purposes, or you are, of course, a title attorney who has to close deals in escrow with funding, or you are a real estate buyer or developer. a short-term buyer, you know, a flipper. Okay, so that's where that idea comes in as far as governance tokens for the private or hard money lender, potentially a hedge fund. They need that council of individuals in order to curate the, you know, for lack of better terms, perfect blockchain technology to utilize for real estate professionals. Who else to ask but real estate professionals? Okay, so yeah, I think that's gonna be it for today. I really appreciate you guys for watching. Everybody who has peeked in and out the video, and those who are catching the replay, I really do appreciate all of you. Make sure you subscribe to Bird Dog Real Estate on YouTube. That's at Bird Dog Real Estate. Make sure you follow us on Instagram at Bird Dog Real Estate. Make sure you follow us on Twitter, where a lot of these posts are posted way, you know, like Twitter is a whole thing when it comes to the crypto stuff. It's really its own culture when it comes to that. And so we're going to create our own space for real estate crypto asset users. So yeah, over there. That's at REI Bird Dog, okay? And of course, make sure you sign up to our website. We have everything's on the website. We have a whole lot of different features. We do have our different ebooks. So we have hashtag Bird Dog to Real Estate ebook. That book is for bird dogs, for you to learn how to go from being a bird dog to a wholesaler. And we have the new ebook, NFTs and Real Estate, where you can just like grasp the concept of NFTs and incorporating the idea with real estate investing. And of course, we have the National Bird Dog List. Bird dogs can sign up for free for investors to contact you. And investors, there's really almost 200 bird dogs available on the list. So you can buy the full list, or you can purchase your specific market if that is available on the website, if there's like a specific number of bird dogs in that area. And of course, we have the Bird Dog Experts REI course. So that is for bird dogs. If you are new, you don't know anything about real estate investing, and you're watching this video, you're just like, what's going on? Definitely check out the course. You'll have all the information there. And we do have our secret YouTube playlist for bird dogs as well over there too. So you just go to the website, you'll see the playlist, and then it'll be videos that are 10 plus years old talking about bird dogging that'll help you gain more insight on exactly how to get started in the industry, and it'll set you on your way properly. And we do have our different groups. So where we talk about topics like these mostly is in our cryptocurrency and blockchain investors group on our website, and that is free. You can join that group for free and get in on conversations like this without any cost. And we do have, of course, our 6-figure wholesalers group that's free as well. So wholesalers can go over there and vibe with others who are wholesalers and just talk about different things that you're doing in your business to help gain, of course, more money, but a different comprehension of the real estate space in general. And last but not least, yeah, we have our mastermind group. That is the 6-figure bird dog system for wholesalers. And so that group is centered around wholesalers who would like to make 6 figures with a bird dog team. And you've already, you know, closed a few deals. You are already considered to be officially a wholesaler. You're not learning to be a wholesaler in this mastermind. You are already have closed a few deals. And you're just ready to expand, ready to gain a team. So you have unlimited access to the National Bird Dog List over there, and the course as well. So you can use that to train your team. And you also get access to different posts like these, along with different ones that help to innovate your real estate business. Because even though it is the 6-figure mastermind, we're talking about not just 6-figure years, but also 6-figure months and 6-figure deals. Okay, so it's just a group to help expand your mindset along with your business. All right. Thanks, Bird Dog fam. I will see you in the next one. This has been Ellie, aka QBDG, Queen Bird Dog Guru from BDRE, Bird Dog Real Estate. Bye, guys.
Do you see this?